I am going to show you one simple setup you can use every time. Start big, then go smaller. 1 hour chart for the big picture, 15 minutes or 5 minutes to check the trend, and finally 1 minute to enter using liquidity inducement. Do this step by step and you will be consistent in no time. So the first thing we will do is follow the trend. As you can see here on the 1 hour time frame, price is creating lower low, lower highs, lower low. As you can see, we have, let's focus on our recent break of structure here. As you can see, this is our recent break of structure, and this is our supply zone. You have to keep in mind that this one is not really a break structure, it is actually a trap. Just because if you look here, we have imbalances, a vector candles indicating that price is going lower, while we have here, as you can see, a lot of wicks indicating that this is a buildup of liquidity. So you can ignore this and wait for a mitigation. Price could also mitigate this decisional point of interest or supply, but as you can see, price tapped it during Asian session. So it is highly unlikely that this decisional point of interest will hold. So let's move the price and wait for the mitigation. As you can see, price still built in a liquidity. Do you see this? It's all liquidity. That's why you need to pick the right point of interest or supply and demand. And inducement happened, broke these highs as you can see. Uh, we have here not double top, triple top, something like that, a liquidity built up to mitigate the supply zone. As you can see, we also have a liquidity to target. Our eventual take profit will be the low of the 1 hour. After mitigation, we can go to 15 minutes or 5 minutes to look for another break of structure or change of character, then mitigation. Now we can see price broke structure or change of character happened on the 1 hour point of interest. The question is, where is our point of interest? As you can see here, we can either mark it from 15 minutes or 5 minutes. Let's mark it on the 5 minutes. In case you don't know this, this is a flip zone. Price pushed, price mitigated, then price reacted, then price pushed again, broke this recent high that mitigated our supply. Price pushed down, mitigated an area here, then reacted on it, then change of character happened. So it is highly unlikely that price will go back up and mitigate this, because first of all, this is Asian high. There is high probability that middle of the Asian holds, then the Asian high. It's a rule of thumb that I learned over the years. Anyways, we will wait for a mitigation here. After mitigating, as you can see, exactly on time also when New York session open, now we can go to 1 minute, wait another break of structure here, or change of character as you call it, as you whatever you want to call it. We have a change of character, but where is our point of interest? Should we enter here or here? Let's go to 3 minutes to check a cleaner one. Since we are entering on 1 minute, we should always take the extreme point of interest. Stop loss above this swing high and take profit. You can do two things. Target the 15-minute low, or since we are with the trend, we can target 1 hour swing low. As you can see, if this hits take profit, we will gain around 29.23 are up. So it is that simple. This will take some time to hit take profit. Now we can break even. Another rule you need to understand is that, let me first show you from the high, from the swing high to the recent swing low. As you can see, by the way, this is a can box. As you can see, these lines are simply 0, 25, and 75, and 1. Let me show you. These are the settings, as you can see. Anyways, let me explain. If you catch trades from the green box, as you can see, there is high chance that you will not be liquidated or let's say induced. But when you are taking trades around here, somewhere around this orange box, be careful holding till the low because price tends to go take liquidities, but there is low chance that price from the orange box go up, mitigate liquidity from the green line. In case price went down, mitigated this swing low, magically holds, then there's a chance that price will go higher and break the green box zone. Do you understand me? Simply, when you take trees from the green box, you can target the low of the 1 hour. But when you trade from the orange box area or zone, take profit the nearest 15 minute or 5 minute and get out. Because price tends to take liquidity. You will be stuck around something like this. Do you see price doing lots of liquidity takes around here, creating liquidity, taking liquidity? Anyways, that's it. Let's continue. We are looking for another chance to enter. As you can see, almost it take profit hit. We have another, as you can see, point of interest. And this one, let's go to 5 minutes. We will find something. Yes, we can go to 15 minutes to see it clearer. But as you can see, there's big difference. You see lots of Victor candles or imbalances. There's big difference as you can see. Here there was Victor candles, but when price was going back up, as you can see, leaving behind a build up of liquidity to take it out later. As you can see, it is as simple as that. You need the liquidity to be induced to the high mitigated, left behind the liquidity to target. So price has a reason to go down. Now we need a mitigation. We can ignore this. Now we have a mitigation, as you can see. We can go to 1 minute. Look for an entry. Our first break of structure or change of character should happen here. Nothing yet. No break of structure or change of character so far. Now we have break of structure. The point of interest we are looking to trade from is this one. But let's see what happens. Unfortunately, price makes another break of structure, as you can see, mitigated the nearest point of interest, which is this one, the flip. Keep in mind what happened here. Let me move this. We have 2 points of interest. As you can see, the flip point of interest, instead of taking the extreme point of interest, this time I won't miss it like this one. I will take the flip zone, take profit. We will go to 5 minutes and see the nearest swing low. As you can see, we have here the nearest swing low. Expect price to take out this low because we are with the trend. Over refinement, this is what happens when you over refine. As you can see, we can still adjust it like this. Taking the whole zone is better than taking the one candle. Let's see now. Actually, this is not the low. This was the swing low. And take profit hit. Now only one trade left. As you can see, almost take profit hit. And price took liquidity from this low. Now price will probably take liquidity from this area because as you can see, we have lots of wicks, which we consider it a build-up of liquidity. See what happens, and then take profit hits. So that's it. I hope you enjoyed the video. And if you have questions, leave it on the comment section. Just try this one out and see what happens. You can't find any liquidity inducement supply and demand easier than this one. So do your best, backtest at least 10 trades and let me know in the comment section how it goes.